Good afternoon, friends. Let's get it. I'm not going to talk too much about what happened this morning, but it lit a fire under my ass, and I'm being very careful to observe my emotions right now because I'm excited that how accurate my analysis was, especially after ICT himself posted basically the same trade, but on NASDAQ. So I'm excited about that. I'm excited about how accurate my price reading was, but I'm a little bit annoyed at how the trader wasn't really able to execute on that. And in one of the cases, especially the first trade we took, it was a little random. But I'm not going to get too into that. I'm going to save it for the review. So, in terms of this afternoon trading, we, on the higher time frames, have reached this weekly objective, which was this weekly fair value gap. So the safe thing to do is we should call it for the week, technically. We should call it for the week. We reached a weekly objective. We should wait for... And the reason why you'd want to wait for next week is you pick your bias and your targets based off of which way you think the weekly candle is going to go. You go top down. So when we were up here, and this was a daily fair value gap, but it's also a weekly fair value gap, and we come up and tap into it, we're expecting lower prices. We go, okay, we think we're going to have lower prices, so we're expecting down close candles. And then you work backwards, so then you work down to the daily. We're expecting down close candles on the weekly. That means down close candles on the daily. So I get down close candles on the daily. And then when you get them on the daily, you can see here, the same ideology. Fair value gap on the daily, tap into it, we expect downside expansion. So this week and this day, we've reached our weekly and daily objectives for downside. And what would be good to do is to wait for next week and wait for a whole new weekly candle to print. Because today, for the rest of today and the rest of tomorrow, it can kind of do whatever the hell it wants because it's reached its liquidity for the week. I'm on, and another thing that should probably keep me on the sidelines today is the fact that, we took 2 losses this morning, and I'm battling with the idea of whether I want to trade because those 2 losses, we read price very well. So it's not like we weren't in sync with the market. It's the difference between the analyst and the trader, and those are 2 different things. And in the market review, I'm going to kind of get into that. But the analyst today was on point, and I was proud of that. The trader, ran into some trouble, and I don't even want to say wasn't on point because that first trade, if we just executed it with the PDRAs on NASDAQ, we would have been handsomely profitable. So I don't want to say the trader wasn't on point, but the trader stumbled. I'll get more into that in the market review. But the rules for this channel are 3 trades a day. You can only take 2 trades in a session. So we took 2 trades in the morning session. We're in the afternoon session. I'm going to see if price presents us with an A+ setup and see if we can possibly execute on that. I don't want a revenge trade. I'm kind of battling with that. I want to make sure I don't revenge trade and try and trade my get back. I've been on a winning streak. We've been on a handsome winning streak. And you're going to have to take losses. Remember, a healthy account growth looks like the stock market. So a healthy account growth goes up, pulls back a little, goes up, pulls back a little. So I've been on a pretty nice winning streak of consistency. So 1 day of loss, yeah, there's going to be 1 day of loss somewhere in there. In terms of the PM session silver bullet, so you can see here, I marked out the lunch low, comes in right at 1, marked out the lunch high. If it goes up and takes this, though, it'll probably sweep these equal highs. But I just marked out this high. I like how, it was right at 330. It came down, dropped below these 2 equal lows, retraced aggressively, and then priced higher. So I am going with the narrative that our sell side was swept. If we see a nice setup to this buy side and it's an A+ setup, I'll possibly take it. Again, this will be going against the daily range, so we're printing a down close candle for the daily. So if you want to get into trades that are going to have high probability of runners, then you're going to want to go trade with the daily close to the daily range, which is down close. So might look for something to continue to the downside. Again, I'm going to only going to look for like a really A+ setup, and with one with a tight stop loss. That would make sense, because again, I'll explain it more in the market review, but this morning the stop loss was a little high. I think it was like 27 ticks. So it wasn't the tight. I mean, that's not anything huge. It's not the smallest either. But that's where it made sense for the trade to be invalid, in my mind. So I want to pick a setup, since we're already taking 2 losses on the day. I want to pick a setup where the stop loss that would make sense is also small. I'm not just going to set a small stop loss. Whoa. See, we came down just right over the top quarter. I highlighted this inefficiency because it's the only fair value gap within this 5-minute fair value gap right here. So I think if we were on the 5-minute coming up for a discount to go lower, that's where it should turn around. The dollar is dropping though. Notice the dollar. It's falling after making 3 attempts to continue. We'll keep an eye on that in the background here on the 1 minute. This yellow line is the dollar. But we have been respecting our PD arrays to the upside After we swept liquidity, we came up, came down, fair value gap, ran up, made a fair value gap here, came down, didn't violate this down close candle, didn't break below it. The body respected the fair value gap. These bodies respected the fair value gap, came up again. Those are also indications to me that this was a fair and actual sweep of sell side. It also happened on NASDAQ sell side. I'm watching this right here. We have this down close candle. We came up. The next one came down and immediately rebalanced. Didn't create a fair value gap. So I would want to see the next few candles price higher. I'm watching that one. Stopped right at the consequent encroachment of this wick. Okay. Next inefficiency is right up here. We also have this volume imbalance. But again, if we are on our way to attack buy side liquidity, it will not respect bearish PD arrays. Paying attention to how these bodies close. If we do come and reprice aggressively below this, I think we could go further down. Have this 1 hour breaker structure of a high, low, higher, high. We have this up close candle. Looks like it could be a fair value gap. I mean, bearish order block. I wouldn't be too sold on this buy side until we start closing some candles above this, because remember, this is a bearish inefficiency right now. We did have these two candles close above it, but when they closed above it and then it didn't want to continue immediately after, that makes me, it's not treating it like an inversion, because if it closed above it, to treat it like an inversion, it would want to come and respect it and not close these bodies below it. The dollar looks like it wants to go lower though, so even though we came up, closed above it, came down, closed below it, it could still go up above it. I'm noticing these candles, see these two candles where they stopped? They stopped right at the body of this down close candle, treating it like an order block. So price is still printing and following bullish PD arrays on this 1 minute time frame. I just want to make sure I'm not trying to enter long at the top of a higher time frame reversal. Yeah, I don't think I'll try and go long, just because we're in a down close day. There's so many things right at this area. You have this 15-minute bearish order block right here, this up close candle. On the higher time frame, you could argue we have a breaker. We have a high, a low, a higher high with a break. That breaker, the bottom of that breaker would be this sell side liquidity line right here. So I don't really like where we are in terms of, I don't like how strong, or where we are in terms of like PD arrays, because it's down close day and we're coming up on some PD arrays, that higher time frame PD arrays that would be bearish. Dollar though looks like it wants to go down. Again, we took 2 losses this morning. I'm going to be playing very defensive. And this, see this, us closing above it, then come back down, closing below it. We didn't respect that PD array very efficiently. What I would like is if we came and touched this red line and then showed some type of reversal pattern. Dollar's continuing to go lower. Yeah, so again, I wouldn't really want to take a long. I think I'm going to change that. I would only try and take a long if we start closing a candle above this 5-minute swing high. Just like right around here. It's pretty high, but again, we're playing defensive. I think that's safe. Because closing a candle above this swing high negates the fact that this is just a pullback higher to go shorter, to go lower. This actually wouldn't have been a bad entry. I might have entered there if we weren't already down on the day, because it was just the fair value gap. And just how nicely we respected all the bullish structure on the way up to this. Because when this candle printed above that candle, the next candle came down, closed at the bottom perfectly, came up. Both of these two candles went just a tick over consequent encroachment. Really nice respect of that PD array after breaking this high. And you can see we reacted off of it well. But again, remember, like I said, there's just too many higher time frame bearish PD arrays right in this area. I don't want to be trying to chase something that isn't there. If we map out this bearish order block, mean threshold, you can see we stopped just short of it twice, printed over it by a tick. So if we did start to come down, I would definitely see lower prices in store. But with a dropping dollar there, I don't see that happening. And going back to just to reiterate what I said earlier in the live stream about how we reached our objective, which was this big orange area. This is a weekly fair value gap. We reached it on the weekly and the daily time frame. So because that happened, we don't have a very strong draw on liquidity, if that makes sense. The next low, these would be the next lows for sell side. But the weekly range could be, the weekly candle could be sufficient enough with just what it's done. And as you can see, we're kind of pulling back off of that weekly fair value gap. On the weekly. And then on the daily, it's respecting it. But if it did want to retrace, dig deeper into this weekly fair value gap, this would be a good reversal spot on the higher time frame for us to be turning around at. See this candle come right down to the top of that candle perfectly. Okay, so if we are building a short narrative, it would be the fact that this 15-minute bearish order block right here, we came up to mean threshold of it on the 1 minute. Now we're retracing lower. We would want to see the dollar start making higher highs, and we'd want to see some of this bullish structure start getting violated to the downside. I'm watching how the dollar in the background looks like it wants to take this swing high. Nasdaq's taking that high. I bet ES will too. Dollar's still making lower lows. Damn, Nasdaq. The way Nasdaq's been respecting or printing price today has been really on point. You can see this volume imbalance came down. Candle bodies respected it perfectly. Came up and created a fair value gap. We tapped into it on Nasdaq. ES didn't do any of that. It's not the first time ES has done me dirty. Dollar dropping aggressively, coming up, blowing through this order block I said. Wow, dollar is dropping. Makes sense. So you can see price was stagnated around that mean threshold of that order block. And then it came back down and then it blew through it. Taking out this buy side. Again, since we already took two L's today, I'm not gonna get in anything unless it's really one-sided. So like right now, I could build out an argument for both sides, and it could just come down, tap into this fair value gap and go. Could do that, but like I said, since we're gonna play defensive, I don't want to take on that risk. Yeah, so this was most likely the silver bullet for the session, right there. As you can see, this was, if you traded off of this long, that would have been pretty nice. In the recap video, I'll explain, why somebody would have picked this buy side as the draw of liquidity. In short, it's going to be because we took this sell side after reaching this higher time frame objective. But I'll go into more detail in the recap that I will be making later tonight. If I was in a long off this, I would definitely would have been taking some position off here and moving my stops to break even, because if you can see, again, it could still be going up, but this, where this 15-minute candle prints and closes will be important, because if this is actually a 15-minute bearish order block, it really just has to get down here on the 1 minute for it to actually be, because look where, this is where the mean threshold is. So you want to see where this 15-minute body closes, because if it closes below this white line, then it could respect it. I don't know if it will, because we did wick above it. And the dollar just keeps dropping. The dollar looks really weak. But again, I want to be in a trade where you can't frame both sides. No narrative. I want it to be a one-sided narrative. I don't think these are bad trades, like entering here or entering here. I don't think it's a bad idea, but again, we took a loss this morning, so we want to make sure what we do next is very, very high probability, especially if we're trading within the same day. But that would have been a nice 15 handles, 14. Dollar looks like a brick. It's dropping like a brick. You can see right here on this swing low, we were tapping into this 5-minute fair value gap. Yeah, I do like upside a little more right now. I would have liked this too. I wish this price action right here just happened in the 2 o'clock hour, because I would have used this as an inversion. But remember, our rules are 2 o'clock, between 2 and 3. So, in case you've been wondering, why am I just sitting here watching price continue to go up? Well, because think about the draw of liquidity and where everything needs to be framed in the context of what you believe the draw in liquidity was. So when we were down here in this area right here, I said the buy side was right here and these equal highs. I didn't want to take that trade though because I thought there was a downside narrative in play. I'll go over that in the market recap video, but I thought there was a downside narrative in play, and I didn't want to take a trade that you could frame from both sides, especially after taking a loss this morning. So we came all the way up, and part of me was thinking, okay, we took the liquidity, does it want to reverse? It came back down. But again, I personally am not going to enter on, say, a fair value gap like this so close to after we could possibly be sweeping buy side in a down closed day. Now, today's been a pretty wild day. If you look at this daily candle, it's pretty crazy. We opened with a gap down, came all the way down, hit this weekly fair value gap. Now it looks like we're going to be respecting this daily fair value gap on the daily time frame. So it's not too surprising. We had these levels marked out, and in hindsight, we know what they're doing now. But me personally, I was not expecting this much of a retracement up. And I wasn't going to take a trade because, well, yes, it can retrace this far up. You can't enter this close to your target. So if our target is this buy side, safe entries are going to be within 50% of where that run initiated. So what does that look like? Well, if the run initiated right here, where we swept this lunch sell side, safe entries would be at this 50% line. So this inversion would have been a pretty safe entry. That's one of the reasons why I said I wish this happened just in the 2 o'clock hour, because if I watched this cluster of price happen just in the 2 o'clock hour, I would have went long off that inversion. I like to do that. I do that a lot. We did that earlier this week. But we're trying to stick to the rules in this channel. Again, I don't want to enter that trade, even though it's a few minutes before too, and I think it's a good trade, and I think it's a good entry. I'm not going to enter that because this channel is supposed to be, I want it to be for people that are trying to, really stick to their rules and find the silver bullet within 2 to 3. I want this channel to be really rule-based, because again, so I just want it to be really rule-based. So this entry happened before too, so we didn't enter it. We have this inversion, which wasn't a bad entry. It just wasn't the most clear entry right here. And that's why I didn't take it. But again, so I'm not going to, if we are predicting this buy side, safe entries are 50% from when the move originated. So I'm not going to be entering right here just to go up there. It's a little greedy. That's greedy trading, especially because, you can say, oh, well, you can still get your 5 handles. Yes, in theory you can. It's just not the best kind of trading because that might not have happened. We could have easily wicked above it and then reversed. So then, now that we're above this buy side, what's the next target? I think the next target is this high and the bottom of this new day opening gap. But again, it's that thing where we've come so far now. And the fact that I always just like to watch when you see just a steady run up like this, because the market can pull back at any time it wants to. And I really like entering after, it goes and seeks liquidity and then continues, because it could try and pull back on any of these sell stops. Anyone who's been long in here, it could try and pull back on with the intention of going higher. But you don't want to get caught up in that. You don't want to get used to the liquidity, and you're going to have to have a stop loss somewhere. So where are you going to put it? You're going to put it at this low? You can put it at this low. It could easily come back below this low. So yeah, that's kind of what I'm trying to kind of explain is, high probability trading and like what it means to take on risk. So I feel like for a while, this didn't really click in my head. You hear like whenever listen to people talk about trading, they talk about risk. And it's like, what does that actually mean? Well, what it means is not entering a trade when there's a chance that we could have a pullback. A pullback makes sense, even if we want to go higher. So if you put on a trade right now, you're going to have to put a stop loss somewhere. And if you don't put a stop loss somewhere, then that's just blatantly putting on risk or taking on risk. But if you even do put a stop loss somewhere, and it's in a scenario where it's probable that we could pull back, then that entry is a risky entry and you're taking on risk. And again, whenever you take on risk, it can play out. We could respect this fair value gap right here and go higher and not return back on it. But what if we came back down and used this as an order block? That could happen. What if your stop was right at the bottom of this candle that made the fair value gap? You would have got stopped out. And in terms of targeting this high and the bottom of this new week opening gap, or a new day opening gap, remember, 50% of where the move originated from is the safe spot. We're still pretty far from 50%. So it's not fun to watch. Like, trust me, I'm watching this and I'm like, it would have been nice to be in that. But I guess this probably just comes from burning yourself enough times. I would much rather just sit here and watch this happen than take another loss. Because, at this point in my trading journey, I've taken my fair shares of losses. And I would rather, it's more painful to take the loss than it is to watch this run without you. Again, see? It's doing what we probably might come back, tap the top of this. But it could have done that in any of these fair value gaps on the way here. It's just happened. It's just, I don't know if it's lucky. Maybe somebody more experienced can explain why it would be this one and not, for say, this one. But come back down. Yep, touching the top of that. And then it could go higher. It could retrace all the way to this inefficiency and then go higher. Yeah, especially after taking 2 losses in the morning. Something that is super important that I found personally for me is it is a lot more important to avoid loss for the sake of keeping your confidence. So I lost twice. Let me paint 2 pictures for you. The first picture is what actually happened this morning, which was I took 2 losses. Even though I was reading that market beautifully. If you haven't, you should go watch that live stream. That was some nice price reading, and I kind of fumbled the bag. on the execution. But anyways, so one scenario is you take 2 losses in the morning. Do you want to try and trade again in the afternoon? Because if you lose in the afternoon, 3 losing trades, that can be a hit to your confidence. That can be a little demoralizing, especially if depending on how big that loss day is. Or what you could do is you could take 2 losing trades and you could decide just to sit and watch in the afternoon. And that is one of the most powerful practices of discipline, because when you just sit and watch, you are actively choosing out of your discipline not to take the trade. And then you keep that air of discipline in you. So it's like, okay, I took those 2 losses, and then you can frame it through the mindset of you're always going to take losses in trading. I was disciplined. I didn't put on risk. Tomorrow's another day. There's always days to find setups, and we'll find it. Versus the scenario of, wow, now I took 3 losses and I wasn't disciplined enough to just sit back and sit on my hands. It's also the scenario of, say I didn't take 2 losses this morning and we didn't trade. Say we came into the PM session and we haven't traded yet today. Then I would probably be willing to put on a little more risk. Or let me say, not play defensively. I would not play defensively. So that probably would be me entering something that isn't super obvious, because we're not already 2 losses deep. Looks like the dollar finally stopped going down, which is nice, because maybe we won't have to watch this whole trade run without us. Another thing that's hard about this price, so if you look on the 5-minute even, I really like 5 minutes. I don't like solely trading off a 1-minute structure, because it can kind of be misleading. It's just, so for example, this is our first swing low on the 5. We got one there, and we do have a swing low there. Okay. Then I take back what I was just about to say. Again, also here, look, we have the consequent encroachment of a weekly wick, where this week's just about done. So it would make sense for the candle body to respect the weekly consequent encroachment. It's this long wick right here. In the market review, when the market closes, and I do the review later today, I will also highlight my thoughts about tomorrow, because depending on whether we close below or in this daily fair value gap, I think could be a predictor on what tomorrow looks like. If we close below it, I could see tomorrow being, because this is pretty heavy looking price action on the daily, I could see tomorrow being also a down close day. If we close in it, then tomorrow will probably be one of those days where we just have to sit it out. Because, yeah, I'll talk more about that in the market review after. No. Okay, so look now. We're coming down to our first down close candle on the 5-minute. So this could just be an appropriate spot for it to finally retrace to and can continue. $3.15 to $3.30 is the sweet spot for the close-in session macro. Okay, you can see the dollar. Looks like it's pulling back. It's looking like these two candles on the 15-minute respected this bearish order block on the 15-minute. I would want to see a 5-minute close below this 5-minute swing low before I entertain the idea of lower prices. But if the dollar keeps retracing as aggressively as it fell, that could happen. Could happen. What do I think about Friday bias? Sorry, Ben. I just saw that right now. I don't know if you're still watching. I wish I could have answered that for you. wouldn't think it'd be a bad entry to try and go short here off this. I wouldn't say it's an A plus setup. I'd call it a B. I feel like B is good enough where like you could execute on it, but don't be super shocked if it didn't pan out. The narrative around that would be we took this buy side, we stopped right at the mean threshold of this bearish order block. I would have preferred to see shift in market structure on this 5 minute. And you'd have to see the dollar continue to make higher highs. So you can see it had this run up. We made this dollar made this swing high right here. I would want to see it. I'd have to make another swing high higher than that. It's also a 5 minute fair value gap. Now that I just realized, I didn't even see that. This will probably be a breakaway gap. So this little fair value gap was actually the entry. That wouldn't have been too bad. I would have liked that. I overlooked it. Could have had a type stop. But again, remember, I wouldn't call it an A. It's not an A plus setup. Could just be a retracement on this 5 minute. Even on the 15. 15 hasn't had any kind of retracement yet. Like the 15's dropping into its first fair value gap. Dollar is about to make a higher high. Okay, I'm gonna log off. I will not be taking a trade. So enjoy the rest of your night. When the market closes, I will be